According to supply managers in the 9 Mid-America states, how is the economy performing?
Our overall survey of supply managers, manufacturing supply managers in 9 Mid-America states, the overall index was down slightly, 65.9, and that's down from March's 71.3, which is a fall off, but still in a range indicating really positive growth for the region and for most of the states in the region. On terms of supply chain disruptions, which is something that has really slowed growth, at least in the past months, 4 out of 10 supply managers expect those supply chain disruptions to get worse. Now only 1 of 5 expect them to get better. And of course that leaves another 4 out of 10 that expect those supply chain disruptions to remain the same. And slowing deliveries is what we've seen across the region, across the U.S., and that's really keeping the economy from really busting out. Of course, this week we saw, or last week I should say, we saw the GDP number for Q1 of 2022. Not good, it was negative. So we're seeing some mixed messages. Our message from our survey was overall pretty good. Over half, 56.7%, indicated slowing deliveries due to COVID-19. So COVID-19 is still with us. 43.3% indicated little or no impact from COVID-19. So all in all, it was a pretty good report. Now here I'll bring up the graph charting the Creighton index, the Creighton survey of supply managers, compared to the U.S. number. U.S. numbers in red, the Creighton numbers in blue there, and the overall U.S. number will come out later on this morning. I expect it to be down as well, but still above growth neutral.
What were the hiring trends?
Hiring was very solid for the month of April. We had a number of index of 62.1 from March's 60.6, so up from a bit up from last month, but still up. And if you look at overall employment growth, remains reasonably good. Now, unfortunately, non-farm employment is 1.6% below pre-pandemic levels, so we haven't gotten back there yet. The U.S. is about 1% below pre-pandemic levels. And if you look at the states that we survey, only 2 of the states are back above pre-pandemic employment levels. Those would be Arkansas and South Dakota. The other 7 states still below pre-pandemic levels of employment. And what does that mean? It means a lot of employees have left the labor market, so our participation rates are still well down as U.S. and the region.
What inflation trends are you noticing?
Inflation is still strong, and that's what we've seen. That's what we're going to continue to see. The April number is 89.7. Again, these indices range from 0 to 100. 89.7 is quite strong. I would call it excessive inflationary pressures, but it is down from March's 95.5. And the most important, we ask about the factors pushing up prices as reported by the supply managers. And about 57% says supply material cost. Another 13.3% indicated transportation delays. Another 10% reported that higher energy prices, higher energy cost, and of course fuel. And then finally, supplier profits. Only 6.7% indicated that higher profits for their suppliers were responsible for the increased inflationary pressures that they are recording.
What is the economic outlook?
Still, inflation is going to remain very high. I expect economic growth to slow. In fact, we may be we'll have to wait and see about Q2 numbers, but the U.S. number could be negative again. If it's negative again, we call that a recession, or the NBER, National Bureau of Economic Research, calls it a recession. I don't expect that to be the case. I expect us to move up above 0, but we're still in a range of slow to no growth. Supply chain disruptions and delays will continue. I expect them to come down a bit, those disruptions. Short-term interest rates will rise by another 0.5% on May the 4th, when the Federal Reserve announces their rate hike, and it will be 50 basis points or 0.5%. I expect another 1.75%, as much as probably 1.5 to 1.75% increase for the rest of the year. For 2022, that would exclude that May increase. Long-term interest rates will go up as well. We're likely to see long-term interest rates go up by another percentage point. Of course, that's going to slow the housing sector more than what we're seeing right now. The housing sector has been going gangbusters. These higher mortgage rates are going to slow that growth in prices, and we're going to see the housing market slow down a bit, but still in a positive range. Keep an eye on what investors, what citizens, individuals, business leaders need, and politicians as well. Keep an eye on that yield on the 10-year Treasury. If that number, now I'm expecting now, with inflation, it should be increasing the yield. If you see that yield coming down now, that's a real solid indicator of an economic slowdown. So if that end number, now if it boosts above 3%, then the downturn is in question. I say if it moves down, say to 2.6, 2.5% from its current level, I think that's a pretty solid evidence we're in an economic slowdown, potentially a recession. Also, you need to keep an eye on what happens with the employment report, which comes out this Friday. That report has been very good. And now this will be employment gains or losses for the month of April. I expect there to be gains, but not nearly as strong as we've seen in the previous months. We're seeing those. If the number comes in 50,000 or below, that's a true warning signal that this economy is truly slowing down and potentially, again, recession later on. Price of a barrel of oil, keep an eye on that. Even with the administration's efforts to slow that or bring that price down, with the release of oil from the strategic reserves, that number is continuing to remain around $100 a barrel. And of course, that's going to end, that program ends in September. And we'll have to wait and see what happens in September in the price of oil. Also, really listen closely to what the governors of the Federal Reserve say. In other words, they're members of the Open Market Committee. They set interest rates, so listen for them to give hints about what they're going to do. Now, particularly, I can't say it loudly enough, watch what they say they're going to do with the balance sheet. They're going to raise rates by 0.5%, but that's the funds rate. What happens in terms of the balance sheet? If they say they're going to be selling it off at, say, as much as $100 billion a month, that's going to push mortgage rates up even higher than I just indicated earlier. So all in all, it was a good report. Keep an eye on the U.S. number that comes out later on this morning. Keep an eye on the employment report that comes out later this week. And watch us the first business day of next month. Until we meet again, may your economic cup runneth over, and thank you.